What I fear and why I see capitulation coming is the percentage of these true operators fell off a cliff.
Yeah.
And I think these newbie financial engineers, my words, not yours, they're at their breaking point. The pressure is building and building and building. And now, this last hope of Uncle Pal saving them, it's the financial engineers that are going to give up. And I don't know what that percentage is. Is it 20% of the deals? Is it 15? Is it 4? Is it 30? But those people are on the cusp of giving up. And I think that will be enough capitulation that drives others. Because once you
Right.
have deal volume, it becomes comps, and
Right. Right.
it starts the cascade. I guess that's what I'm seeing. All righty, Mr. Jonathan Twombly. I have a theory about the commercial real estate market, really office, multifamily, that I think is going to play out in very short order. And I want to get your feedback. I want you to ask me questions because I want to know if I have a blind spot. You ready for this? So I think we are finally seeing everyone understand what higher for longer means. So I think we are going to have higher rates for much longer than people expected. This higher rates is going to lead to greater pain, but greater short-term pain. And when we look back on this crisis, when we're mopping up the end of this, it will actually lead to a faster resolution. So how does that hit? How does that feel? What are your questions?
Well, I want to know what you mean by faster resolution, first of all. That's what I don't understand.
Basically, what I mean by faster resolution is recognition of losses. We are going to
Okay.
have the losses absorbed, recognized, and thus the assets recapitalized or relended or whatever the right words are in your space. And there will be a new operator in place, and we will start the next cycle.
Okay. And then, so my question is, why do you think that's going to happen?
Because I think there's been a lot of behavior of folks hoping and praying that lower rates coming, that Uncle Powell and the Fed team was going to bail them out in some manner. And people were holding on. And when I say people, I don't only mean operators, I mean banks, commercial
Yeah.
banks. And I think what's transpired over the last 10 days or so is recognition that rates are going to be higher. They're going to be meaningfully higher, 50, 100, 150 basis points. And I think there are both operators and lenders that are like, extend and pretend it's not going to work. We just got
Yeah.
to absorb the loss. Got to put a new operator in place. We can't hope that Uncle Pal is going to save us. And the people that were holding on by their fingernails are just going to be, the finger's going to be stepped on, and we're going to have a lot of pain in a smaller window. And then the window will be closed, and we will be out of this faster. But the pain is going to amplify. So, the nine inning baseball game that you and I talked about earlier, it might be a 6 inning softball game or something like that. It'll just be shorter.
Yeah. Let me think about this. So, I mean, we have had a really large amount of extended debt, right?
Oh,
So, the wall
yes.
of maturities that people were saying was going to hit in 2024 has been kicked back to 25 and 26. So, a lot of this has already worked its way through the system. So, I still think that there is going to be some extended pain because
Okay.
of what's already transpired in this extend and pretend
Hmm.
world. I think that there still is a lot of hope because you're still
Okay.
seeing people talk that interest rates are going to come down. But I think people are really unrealistic about it because as long as the economy stays strong and we have the employment rate is below the natural rate of employment or
Hmm.
unemployment rate, I should say, that we're just not going to get a cut. We don't want to pour gasoline on the fire again. So I just don't see that happening. I think there's
But
still
are you? I'm curious. I'm curious in your world, because in my world, people now are starting to talk about rate hikes.
we're starting to see that some people are saying that, right?
Okay.
Um,
Because that can't be good. Higher rates lead to lower cap rates, right?
yeah, I mean, it's yes, that's true. Also, for all those people who bought floating rate debt at the top of the market with rate caps, it's going to make rate caps more expensive. That will
Yeah.
probably cause some more foreclosures. So I think you're right in that there will if we do, especially if we see another rate hike, I think there will be capitulation. A lot of people will say,
That's the exact word I was thinking. I'm thinking right now we're on the cusp of capitulation.
yeah,
Maybe you're right. Maybe it would take a surprise or an unexpected rate hike.
yeah, I
Capitulation is where this just goes. I'm done. I'm
yeah,
out.
yeah. I mean, I think that if there's a rate hike, then a lot of people will abandon. A lot of people have been holding on to this rate, rate reduction narrative, will give up at that point. And I think both the lenders and I think a lot of the borrowers who have been holding on, will just say, you know what, this is no longer worth it. I'm not. What am I holding on for? Yeah, just gonna hand the keys back. So I could see that happening for sure. But they'll, like I said, the reason that I think so much has already passed through this extend and pretend. Uh,
Okay.
it's already locked. Like the extend and pretend is already locked in
Yeah. You
for
can't undo
a
that, right?
lot of
You've already
money. Yeah.
got the extra year. Okay.
So, and I think that so just as of today, it was reported that um, basically like rent growth. So rent. So let me back up. So income growth has finally exceeded rent growth, right?
Correct.
So that means that rents will follow, right? And there is an
There'll
opportunity.
probably be some makeup, but yeah. Mhm.
Yeah, but it means that this is still a good thing for all owners, and it means that they do have an opportunity to start growing their NOI again. And
Mm.
whether they'll be able to grow it enough to like grow their way out of their problem by 25,
No.
26, we don't know.
No,
But
I know. No, they're not going to. The
I think
math doesn't work.
I think some people will be able to.
I don't know, Jonathan. I mean, you got taxes, you got insurance.
Well,
Maybe you
yeah,
make up that part. I mean,
those are
there's a
other.
lot of currents,
So
cross
listen, I
currents.
mean, so taxes and insurance. I mean, if you, so I was talking with somebody this week about who owns a lot of property in Texas and was talking about the fact that in Texas, so in the space of 7 years, their insurance went from 200 a door to 2,200 a door
Oh
on
my
average.
God.
Yeah,
11x.
yeah, in 7 years,
My God.
and on top, and a lot of that has to do with value, right? Because they're
Of
constantly
course. Yeah, of
right.
course.
So if when property is like this is kind of like the hidden people are like, oh, woohoo, property, the value is rising, but then your insured
Of
value,
course. Yeah. It has to
right?
go
And
up.
then so what happens then too is a lot of people they don't realize this when they're underwriting. They look at the the seller's insurance number, right? And that's based
Yeah.
on their sale price. They may be underinsured at that point.
Correct.
But when you buy it at your new sales price, like it's going to be your insurance is going to jump a lot. So people oftentimes
Yeah. They
underestimate
under,
insurance
it's
costs and they
shocking.
overpay, right? But
Yep.
then the other thing that happened in Texas is that you know hyper growth has a cost, right? Now, Michael, you studied economics, you studied finance, you know that
Oh, yeah.
high growth companies they have no cash. They're constantly cash strapped, right? They just
Hmm.
burn cash. And high growth states are the same. So Texas has no money. And so, and they know, and since they don't have an income tax, they got to get the money from somewhere. So where do they
Got to
get
get
it?
it from somewhere. Yep.
Property taxes. And what are they doing in property taxes? Well, they haven't raised the rates, but what they did was they went from assessing at 50% value to assessing at 100% value overnight.
Mm, there you
So
go.
the same operator told me that his property taxes now constitute half of his operating expense.
Oh, ouch.
And that's on top of the insurance rates going up, right?
Well,
So, and
that's why I cringe when you said, hey, a little bit of rent growth is going to fix your NOI problem. No chance.
yeah,
Taxes,
well, I mean, so it
you got
will
to
in
make up
some
for
ways.
that.
So listen, if you're in the Midwest,
Okay.
right, where
Yeah,
your
maybe.
insurance has shot up, your values have not shot up the same way, but you've had decent rent growth all this time, then you're probably going to be okay. If you're in a couple states and you know, Arizona insurance wise, your insurance is fine because it's in the middle of the desert. They haven't really, insurance is not taking a hit. I'm sure
Mm,
property taxes have just with valuations going up,
sure.
property taxes too. But whether they went from 50% valuation to 100% valuation, that I don't know. There's a
Yeah, I
way
don't know.
Texas. But I think if
Yeah.
you're, if you're in Florida, if you're in Texas, you're really if you're in the wind belt, if you're in the hurricane belt, you know, it's your insurance
Yeah.
rates have just blown up
Yeah,
on you.
it's going to be interesting. I think you're right. There's been a lot of rollover, right? They've already been granted the extra year. Like, hey, same terms, we'll just turn a blind eye. But I mean, there's a chance that rates stay higher. There's a chance for no cuts in 24. I saw somebody calling for a first rate cut in March of 25 at this point. It just keeps getting pushed back. The battle for inflation's clearly not over. We've seen CPI rise the last 3 months. I'm actually really concerned about the June CPI print, being even higher than 3.5, given the base effect that I see coming. But yeah, I think capitulation's the right word, and maybe I'm early.
But
Um,
I still, I mean, I'm just going to push back on this just a little bit,
Good,
just in
please do.
the sense that I just don't think the banks want these properties, right? So I think that you may, and a lot of the lenders are kind of like these non-bank lenders as well, right? Who want the
Yes,
property even
yeah.
less. And,
But
I mean,
I guess this is where I'm going. I think when you were, when you were in the business and you were, buying in South Carolina and all of that, that time you had a lot of professional operators.
yeah,
What I fear and why I see capitulation coming is the percentage of these true operators fell off a cliff.
yeah,
And I think these newbie financial engineers, my words, not yours, they're at their breaking point. The pressure is building and building and building. And now, this last hope of Uncle Pal saving them, it's the financial engineers that are going to give up. And I don't know what that percentage is. Is it 20% of the deals? Is it 15? Is it 4? Is it 30? But those people are on the cusp of giving up. And I think that will be enough capitulation that drives others. Because once you
right,
have deal volume, it becomes comps, and
right, right,
it starts the cascade. I guess that's what I'm seeing.
yeah, yeah. Yeah, I mean, I can see that scenario playing out. I mean, what'll really, I mean, this is all driven by the cost of capital, right?
Of
And so,
course.
and the availability of capital, I should say. So it's if you start seeing any kind of significant foreclosure activity, then the banks are just going to just, the amount that they're going to be willing to lend on anything is going to just dry up,
Fall off a
right?
cliff.
So,
Yeah.
and then that will just have a cascading effect on the market, right? So
Yeah. That capitulation, because I saw it in '08 in residential. Once it broke,
yeah,
it ran for 5 years.
yeah,
Yeah, it was ugly. So yeah, capitulation is something that I really do think this higher for longer is going to take out some of the soft financial engineers who just can't handle the pressure. Frankly, they were never made for it. They got
yeah,
lucky and now are getting spanked. And that even if it's just 15%, that capitulation in those folks will start the dominoes that unfortunately impact people up the line. So that's what I see coming. I hope I'm wrong, but at the end of the day, if it does happen, I want people to hear the last line. It'll be faster. It might be greater pain, but it'll be faster to the other side and we can start healing.
yeah, yeah.
All righty, Jonathan, where can people find you? Thank you for being a part of the channel.
Yeah, sure. Come follow me on LinkedIn. Connect with me there. Just tell me that you're from this channel, and I'll happily accept your connection request. I post almost every day there, various things about multifamily and hotels. So come on and join the conversation.
Awesome. Thank you so much.